Good morning and welcome to BloombergQuint, India's first digital live streaming business news service. I'm Neeraj Shah and you're watching Indian Open. Let's go straight to the headlines. US Treasury says it has no plans of restricting Chinese companies listing on Wall Street, even as Bloomberg reports that Trump administration may cap US portfolio flows into China. The Reserve Bank of India puts Lakshmi Vilas Bank under its prompt corrective action framework, citing higher NPAs, weak capital position and negative return on assets. K. Joy Thomas, suspended MD of Punjab and Maharashtra Bank, admits to underreporting on the bank's exposure to HDIL in his letter to the Reserve Bank of India. The Indian Railways Catering and Tourism Corporation's 638 crore rupees IPO opens for subscription today. This is the largest amongst the 4 railway IPOs thus far. And the government bans onion exports, limits stock holding for traders in a bid to keep a tab on prices. Well, what's happening around the world is pretty interesting, really. There's lots of the protests in Hong Kong have only intensified, and it's an important barometer, really, from a world economy or markets perspective as well. And what's happened since Friday, our markets closing, is also important, both between the US and China. An official at the US Treasury says that there are no plans as of now to stop Chinese companies from listing on American exchanges. This comes a day after Bloomberg reported that the Trump administration is discussing ways to limit US investor access to China. Derek Wallbank and Tom McKenzie of Bloomberg News bring us both sides of the story.
There's a couple of different things that could be done here. One of the ones that you mentioned was the one in the Treasury's denial that they said they weren't looking at doing at this time. The other things that you could be looking at are sort of maybe capping Chinese companies as part of certain indexes. You could be looking at limiting investors' exposure through certain limits related to pension funds. There's a whole range of things that I think the U.S. government is now exploring, but there have been no key decisions made here, and I think that's an important note. When you're looking at this White House and you're looking at them exploring something, and the administration, particularly the Trump administration, exploring something, it's really critical to know at what level it is. Here's this one's level. The president is aware of these talks, has apparently blessed these talks. They're happening at a pretty senior level, we understand, and they are, but there has not been a firm decision made. So right now they're sort of, and this is also, I should say, this is not a trade necessarily issue. This is not packaged with the trade stuff. Although, like everything with the U.S.-China relationship, it all sort of gets tied up in the end, doesn't it?
Well, Tom, we're waiting on some sort of response to this from Beijing. What have we heard?
So we haven't had Beijing respond directly to this reporting and from these statements out of the US, but what we have had is a comment, or a statement, I should say, from the Financial Stability and Development Committee, which is a very powerful financial committee overseeing the reform and opening of the sector here, headed by Liu He, the Vice Premier, who of course is also in the driving seat when it comes to those trade negotiations with the US. They put out a statement over the weekend saying that China would continue to promote two-way financial opening. They would continue to encourage foreign financial institutions to invest in China and to get access to the Chinese markets. They didn't detail additional steps they would be taking, but the view from Beijing is that this opening up of the financial sector here will continue. Of course, we have seen over the last 2 years a number of measures pushed through by China to do exactly that, whether that is the stock and bond connects, whether that's allowing investment banks like JP Morgan and Morgan Stanley to start the process towards full ownership of their Chinese businesses, or indeed most recently removing the cap on quotas for institutional investors to buy Chinese equities. Those reforms have happened, even if some would say at a glacial pace, and it's expected that those reforms will continue. But certainly this does make things much more complicated. And again, China has some reasons to want to attract FDI because it wants to shore up its capital account. It also wants to push towards a greater internationalization of the yuan. That's why we expect these reforms to continue. But certainly this is a new conundrum for them to have to mull over.
Well, and add to that, if indeed the US does consider cutting back investments into China, that would be, well, in the eyes of a lot of people, Stephen Roche, for example, an unmitigated disaster. Now, we don't quite know really which way this shapes up, but this clearly shows that if there were trade wars that were the center of attention, and now if there are capital wars, then the trade war between the two giants is far from over, and it might actually be a long drawn, prolonged one, which might keep on impacting markets every single week. Have the markets gotten impacted as a result of that? Well, the US markets are okay in Friday's session, and the Asian screen too for now looks just about in the red, about 0.5% for Nikkei, but the other markets are not quite taking an impact of this. But can it happen? Well, let's ask Seth Freeman. He's Senior Managing Director at Glassratner Advisory and Capital Group, joins us right now on the phone line. Seth, good having you. Thanks so much for joining in. How do you see the developments that have happened in the last 48 hours? Listing of Chinese companies on exchanges is one thing, but the US probably considering pulling back or limiting investments into China. How do you see this move, potential move, if it were to happen?
Well, I think it's going to be a very provocative idea because institutional investors are now accustomed to having exposure to Chinese stocks and listings here. And moreover, many of these stocks ultimately end up in baskets of index-based investment products.
But Seth, I mean, the point is, if this is under the realms of consideration, then it clearly shows that never mind what the conversations might be about how productive conversations between the two countries are on the trade war front, there is certainly some bit of either trade war or a capital war which is consistently on and which might consistently keep on impacting world markets.
There's no question. There's a group of people in the administration who are looking for different angles to impose their policy choices, and we've kind of reached a maximum, and with some pushback, by the way, in terms of increasing tariffs on goods. The public is not going to stand for higher prices resulting from the tariffs. We saw the pushback from the increases we were expected to have in September. That was going to severely impact consumer goods. The pushback from that would have been enormous. So now they're looking for a different angle.
What's the impact that you see set likely on this? U.S. markets reacted in Friday's session. The Asian screen is not awash with red, just a bit of a downtick for now. How do you see the markets trading in the near term?
Well, quite a few Chinese stocks fell significantly. And some of them were quite large caps. So I think it's extremely negative. I'm not sure exactly how it will be implemented because it's just very complicated to do this to institutional investors and foreign investors. So, I think the bigger concern this week, frankly, is going to be looking at the manufacturing PMI and where that's going. And then later on this week, we're also going to see employment levels from both ADP and the government. And I think that will have more impact on markets, frankly, than these bizarre announcements.
Well, let's wait and watch. Seth, thanks so much for taking the time out and joining us early in the morning. That's Seth Freeman of Glassratner with his thoughts. Believes it will be, well, quite a disaster if this moves were to go through, but maybe for the near term, a lot of other conversations will have a bigger impact. A lot of data will have a bigger impact than what these announcements or these news reports might have. Speaking of that, by the way, while the Chinese markets are not reacting too much, remember a lot of these Chinese stocks and the ADRs listed in the US did take a beating. Alibaba, for example, had dropped quite severely in Friday's session on the US bourses as well. So let's wait and watch if during the course of the day, China will have these major reactions if they do, and that will have a bit of an impact on our markets as well. Speaking of our markets, Well, it's a truncated week, but you would reckon that maybe, just maybe, you will probably see moves of consolidation in this week. The absence of large short positions, except for the FI position on the Nifty futures, but the absence of other large short positions on the index might just cap the upsides, because you would not see some of these short covering moves. And key things to watch this week from our markets perspective and from global markets perspective, aside of course, the data that Seth Freeman spoke about, you'll have the WTO dispute outcome, and if the US were to win, that would mean additional tariffs on certain goods in the EU region. Developments on this US limiting China portfolio flows, as well as the September auto sales data for the month for the month of September for India, and that will have some bearing on the auto stocks as well. So do watch out for all of this. Stocks to watch out for in the session today, 2 or 3 that I think, or maybe slightly more than that we should watch out for. Lakshmi Vilas Bank as well as Indiabulls Housing Finance, I would reckon. RBI has taken the action on account of the higher NPAs and the insufficient capital, but it's been put under prompt corrective action. Does this also lead people to believe that the banking license for Indiabulls Housing Finance might be a deal dead? Well, it's in the realms of conversations at least, and it's coming out, and therefore it might have an impact on the stock. So do watch out for both of these names today. Inspection of the Goa facility for Cipla. US FDA has issued the Form 483 with 12 observations. Goa plant, remember, caters to about 25 to 30% of US sales, so important from Cipla's perspective. Let's see how this one does. RNAM and is important because Nippon now officially owns over 75% stake, and Reliance Capital just a 4.27% stake, and that's gotten a lot of people to thinking about whether RNAM could close the valuation gap between itself and HDFC AMC. CLSA believes that this move would help reclaim market share for Reliance Nippon Asset Management, and Nippon may also help secure international fund management mandates. They don't pay too much, but the overall number of funds that you manage, or the quantum of money that you manage, goes up, and that helps in valuations for sure. Let's see if RNAM were to react positively to that. Morgan Stanley's hiked the target price on Titan. This is the second hike that they have done. The overweight rating, the price target hiked to 1450 from 1300. 1300 was done just a week or 10 days ago, by the way. And strong growth amidst difficult market macros will aid valuations, according to Morgan Stanley. Maybe, just maybe, Titan could react in the session today. Lastly, for all alternate asset watchers, it was a terrible week, last one. Let's see what Bitcoin does this week. But last week, Bitcoin just got slapped big time, and it capped a very bad week, the worst that we've seen in a number of months. Let's just wait and watch if the cryptocurrency manages to recover a bit in this week or no. Let's tell you what's lined up on First Word today, though. Is a collection of the top editorial stories that we believe we should bring to you. What prompted RBI to put Lakshmi Vilas Bank under prompt corrective action? Shefali Malik will tell us. Government is offering some shares in state-run companies through Bharat-22 ETF. Nikki Mirchandani will get us the details of the further fund offer. And Yatin Mota will tell us what brokerages are expecting from auto sales in the month of September. First up, the Reserve Bank of India has put Lakshmi Vilas Bank under its prompt corrective action framework. This comes at a time when the lender is looking to merge its operations with Indiabulls Housing Finance. Shefali Malik is here to tell us what prompted the banking regulator to take this action, and are people talking about the side implications of such a move? Shefali, good morning.
Hi, good morning. First of all, Neeraj, welcome back.
Thank you.
So basically what prompted the RBI, it's basically breaching of couple of thresholds. So RBI has couple of thresholds, 1, 2, 3 for various parameters, NPAs, capital levels, leverage, etc. So Lakshmi Vilas Bank has breached couple of them. So starting with net NPA levels, it was about 8.3%. So that breaks the threshold 1, which is that net NPAs have to be more than 6% but less than 9%. And in capital adequacy ratio is 6.46%, and the negative return on assets was about 2.72%. So RBI monitors that for a period of 2 years. So for them, it has been for a period of 2 years that it has been in negative. So that is one of the parameters which the bank has not been able to meet. Other than that, there's also a concept of leverage, which is a multiple of tier 1. So that has also been considered by Reserve Bank of India, and the bank reported a loss, and they've been in a very weak position since quite some time, and that brings us to the aspect of merger. I remember in one of the earlier con calls, Indiabulls Housing Finance said that that when they were being questioned about the the merger prospects and how confident they are about the merger going through. So one of the things that they said were that Lakshmi Vilas Bank is as it is in a weak position. RBI has been going all out to fix the weak banks. So they were pinning their hopes on that, probably because it's weak. So RBI may come in, may give a nod just because in an attempt to fix the bank. So it has been weak. We saw that in the earlier results as well. What has changed in last 2 months since the July earnings? So that is something. One of the wordings in the release that Lakshmi Vilas Bank sent out was that there was an on-ground inspection as well. So probably more might have come to the notice of Reserve Bank of India, because of which it initiated this PCA framework. So that's that, and whether it has any implication from the merger point of view. So it was already weak, and so it was already being considered. So I'm sure right now there are a lot more scrutinies going on. So that is something that we'll have to watch out for.
Yeah. Now I was just wondering if within your analysis parameters, or if you spoke to any of the brokerages or other analysts, did they believe that this move, in effect, irrespective of what may actually happen or eventually happen, would lead people to believe that that maybe all is not well with the merger going through as well, and it will have an impact on both the stocks in the session today or over the course of the next few days?
As per my interactions, probably what some of them pointed out were, some of them said that it may not have an impact because we already knew that bank is in a weak position. Some of them said that now that it has been initiated, probably RBI may want to wait and watch for some time whether the bank is able to fix itself in some time. They had plans to raise funds as well. So I don't know if it leads to some sort of a delay in the process. So from Indiabulls' point of view, yes, it may have some impact, because if there are some thoughts going on that probably there could be some delay, then it will have a negative impact to that extent.
Great, Shefali, thanks so much for putting that into perspective. That's Shefali Malik with the latest on LVB, and well, what it does to LVB is known or pretty evident, but what it may do to Indiabulls Housing Finance as well would be very interesting to see in the session today. 5% down LVB in Friday's trade. Let's see what happens today. The next piece on First Word is on the Bharat-22 ETF. The government is looking to divest more shares in state-run companies through the Bharat-22 ETF. The second further fund offer will open for subscription this week. Nikki Mirjani is standing by with the details of that. Good morning, Nikki.
Hi Neeraj, pretty much basics first. When is open, issue size, and various other things. Anchor investors, they're supposed to be open for subscription for October 3rd for them. For non-anchors, it's October 4th, and the issue size for this is around a total of 8,000 crore, which is the basic size is around 2,000 crore, and a green shoe option of 6,000 crore. And minimum application size for anchor investors is around that 10 crore, and for non-anchors is between 5,000 to 2 lakh. Benchmark index will be the BSE Bharat-22 TRI underlying benchmark index, and it's the fourth tranche is going to be listed both in BSE as well as NSE. If you look at the composition, where it's pretty much the basic, and that's how even the rebalancing would be worked out, keeping in mind the kind of caps both for large cap, mid caps and small cap. At this point of time, the index has large cap of around 88%, mid cap as a percent is 11%, and small cap is to an extent of 1%. In terms of the major sectors which are overall going to be a part forming the S&P BSE Bharat-22 index would be 20% overall, more than 20% for finance, industrial and utilities, and FMCG would be to the extent of 14%, and basic material will be roughly around that 4% kind of level. And if we were supposed to speak about the 5 stocks, which would be the top 5 stocks which will have maximum heavyweights in the overall index, it will be L&T, which would be 16.7%, ITC, the FMCG, as you know, the basket overall commands 14.3%, and that's one precise counter. ITC there at 14.3%, State Bank of India close to 9.5%, Axis Bank and NTPC. These are the top 5 stocks in the portfolio right now. What investors will get out of this particular ETF and investing into this would be the diversified exposure, given that the kind of variety of sectoral sector that are present right now in the portfolio, and also the kind of bifurcation that we have between large cap, mid cap and small cap. It will have reduced concentration on index heavyweights. As we just saw, it was around 45 to 50%. The rest is they're not index heavyweights per se. And then highly liquid index, given that 97.5% of the stocks in this index are present in F&O category. So clearly there is going to be some amount of liquidity there, and also a discount of 3% to the investors on the existing ETF right now which are present. So that's clearly the kind of discount that this fourth tranche will bring in, and also the higher dividend and the reasonable valuation that this particular tranche will have as compared to that of S&P BSE index. If you look at the valuation there, PE ratio, price to book value ratio, all of them are actually at a discount as compared to the Sensex index. But look at the dividend yield. Bharat-22 index has a dividend yield of around 3.5% as compared to the Sensex index of around 1.5% for that matter.
Okay, we'll watch out. Thanks a lot for that, Nikki. So that ETF set to open today, and let's see if there are good times for them, for some of those companies or the investors in these instruments. But there are tough times for the auto space, and these tough times call for tough decisions. So automakers may have decided to keep offering discounts and also cut prices in some cases, but that's failed to push up sales, at least in September. A BloombergQuint poll conducted amongst 4 brokerage houses shows that almost all automakers failed to sell more vehicles than the same period last year. Yatin Motaz here with the details. Good morning, Yatin.
Good morning, Neeraj, and good to see you back in the office.
Thank you.
More importantly, not great news expected from the auto sector. Remember, tomorrow, most of the auto companies will come out with their, monthly sales numbers. September not great. Be it the retail sales or be it the wholesale numbers, September is most likely to be muted, and a double-digit fall is seen across segments. Let's talk first about the two-wheeler space. We have Hero MotoCorp, Bajaj Auto, as well as TVS Motors. All of these companies will report a sharp double-digit decline in their overall volumes. As you can see on your screens, Bajaj Auto probably will report a 15% decline in sales. The export markets are also not that great in terms of the overall sentiment. Hence, Bajaj Auto will be under pressure on an overall basis as well. Royal Enfield, again, here for the many consecutive months, probably in 2019, we could see the trend continue in terms of the overall fall. 19% decline seen as far as Royal Enfield sales are concerned. And TVS Motors, despite high promotions, even in the scooter segment, nothing really has cheered up the marketplace. 20% decline seen there as well. As far as four-wheeler players or passenger vehicle segment is concerned, M&M could see pressure. The UV market share is under pressure. Overall 22% decline seen there. Maruti Suzuki, this is one number I'll be watching out for. Of course, the management has cut prices aggressively, even for very good models like Baleno. So probably that could have some kind of effect post the Dussehra period, which is starting today onwards. Probably that festivity would be seen in October for the demand, but as of September, 25% decline seen there. Tata Motors, again, the commercial vehicle players are expected to see a very sharp decline. 40% plus decline is seen both for Ashok Leyland as well as for Tata Motors. So these are the two commercial vehicle players wherein sales will be surely under pressure. When we spoke to the management of Tata Motors a few days back, they also said that the commercial vehicle business is surely under pressure despite the heavy discounting which is there in the marketplace. And finally, the tractor segment. Of course, the monsoons have been good. Sales are more or less expected to be stable as far as that segment is concerned, on the back of better rural demand in the marketplace versus the other segments of the auto segment.
Yeah, then just a small follow-up. So this month was touted to be the beginning of the festive season. We know Ganesh Chaturthi is not really the place when people go out and buy big way. Maybe Navratras and then Diwali. Are we to expect October on a sequential basis to be dramatically different than September? Because September was expected to show some signs of an uptake, and that doesn't seem to have happened if the dealers are to be believed.
So Neeraj, you're right that September would be muted, but on a month-on-month basis, things are surely improving certain bit. Two big factors, Neeraj, for the month of September. Number one was the GST cut, which was anticipated by consumers. Forget about market. The consumers were expecting that some kind of relief would be given on the GST front. Probably everybody was postponing their buying decisions. That is number one. Number two, given the fact that the festive season or the actual Navratras started yesterday. And this week we could see some good flows coming in. Dealers that we contacted, and the copy is available on our website, they have been saying that the footfalls have improved significantly on a month-on-month basis, and also on a 2019 basis. So clearly there is improvement. Probably the conversion is most likely to happen in the Dussehra period and the forthcoming Diwali period. So probably October should be looking up according to the industry as well.
Well, I think the industry would be crossing fingers for that to happen. But Yatin, thanks so much for putting that into perspective. Well, September clearly not the the month wherein we are likely to have seen some uptick in terms of auto sales. Maybe the Shraddh period also had to do something with it. Maybe October does that for the Indian auto industry. Well, that's all that we have on First Word today, though. But stay tuned, because lots more lined up on Indian Open. We discuss markets and macros with Manish Chaudhary of BNP Paribas. Recount Bhaskar Bhatt's journey at Titan on a special conversation with the outgoing managing director at 9:30. But after this break, a full tilt towards the day's trade.